Hey, what's up, Silver Trader FM subscribers and viewers? It's time to once again look at the charts. Things are looking quite interesting. Let's look at the groupings. Like I said in the past, where the financials go, the markets usually follow. 1 week performance is leading at the bottom, 1 month performance, second from the bottom, 3 months performance, third from the bottom, and 6 months, it's what? Fourth from the bottom. So not looking good. Also, lack of quantitative teasing isn't helping the markets as well. It's very sad when printing money is the only thing that can save this gigantic market. Let's look at the dollar. I wanted to talk about long-term, short-term trends. So in the long term, the dollar has rallied up to a high of 121 near the dot-com bomb. Headed downward while the index has rallied, Dow Jones, S&P, NASDAQ, until its peak of about 2007. And then there was strength again in the dollar, and that's when all the indexes pretty much crash in October and reaches climax of S&P 666 around March 2009. That's around this time frame here. And then, once again, quantitative easing and teasing. Dollar crash, markets rallied, did the opposite. Then around 2010, needed some more quantitative easing too. Dollar crashed again, which is near the bottom of this now somewhat bullish channel for dollar, but something to note here. Let's look at the weekly, the dollar index. It is popping up over these previous resistance levels. So for now, the dollar is on a bullish, somewhat bullish run. I believe it can reach as high as 86 and may even top out around 89-ish level. If it does get that high, let's back this out a bit. It could be M for murder and chaos for the dollar. If it reaches this high, guess what? Does it make sense? This was S&P 666. How low can we go on the S&P? We shall see. Before Bernanke needs to print up some more paper to save our economy, to save the stock market from internally exploding into itself, right? So gotta see what happens there. We'll see how much pain the people will tolerate before they beg for more paper printing. But I'm not fooled by this, because, you know, it's gone down, now it's just going in this sideways channel, temporarily in this upward channel. I'm not fooled by it, because the long-term picture that I'm looking at is really the purchasing power, as everyone else should be looking at the purchasing power of the dollar ever since Roosevelt made gold illegal for U.S. citizens. It's gone down for the past 80 years. It's 2009, but let's add a few more years. We know how much the dollar has rallied. Very little. In the long-term chart, which is a very consistent chart for the dollar has lost about 90, I believe it's over 95%, more like 97% over 80 years. So will that trend continue? Usually the longer term trends will continue its trend. The trend is definitely your friend, especially when it comes to the purchasing power of the dollar. There's no magic way for the dollar to gain purchasing power, right? It can only lose it because more dollars have to be printed in a debt-based fiat currency as a dollar turned truly fiat. 1971 in the Bretton Woods, basically Nixon said, no more exchange of your paper for gold. You'll exchange your paper for more worthless paper if you want that as a trade, which is a losing trade in the long term. So since 1971, lost another 81%. It's way down here. So if you have any questions about What's more powerful, the dollar or precious metals? This should basically paint a picture for you that the dollar is a losing trade if you're gonna hold on to it. And if you're a subscriber to my channel, you should already know that. So let's take a look at silver, gold, and the other precious metals. So looking at silver, the long-term chart. Let's pull it way back out. 20 years. Silver has been going sideways for the longest time, since the early 90s. Then it went on this bullish channel for the past 10 years. One thing to note here is this long-term bull channel has this upper trend line and lower trend line. And I believe silver would have just stayed in this trend line if it weren't for any market disaster in 2008, 2009, and lack of quantitative easing. It would have just stayed in this nice, gentle, upward trend channel, right? Which I see it entering back again. But if you look at this, silver has two patterns here forming a symmetrical triangle, longer term, right? Which means it can go either up or down, and also this descending triangle right here. Let's take a look at this on the weekly. It's more obvious. This descending triangle is usually more bearish than bullish, especially on a downtrend. And we've tested this bottom line 1, 2, 3, 4, 5, 6, 7, 8, 9. Say 10 times, right? So chances are silver will head lower because this lower part of this triangle has been tested multiple times and the bears seem to be winning. I don't see higher highs hitting this upper triangle, which would be more bullish. So at the moment the bears are winning and the bulls may even turn bearish due to that fact, and we may see silver hit this lower 10-year channel about $21, $22. That's where I'm expecting to bounce and find some support at this level. We shall see what happens, but I'm predicting that it has a bigger chance of falling off its support level if it reaches this $26 level. And a lot of stop losses will get triggered and the bulls will be on fire and turn into bears, and the bears will just take over the market until the bulls regain their strength back here at this support level. We shall see. I believe that's what's going to happen on silver. So gold, also in the long-term 10-year channel. Picked up this new channel in 2008. Like I mentioned in the past though, sometimes it likes to jab up in the same distance from top to bottom of the main channel as it did here mid last summer, and it may do the same distance on the downside, which is about between 1400 and 1450. So if it does breach this lower part of this descending triangle, which is usually more bearish than bullish, we shall see it head down to about 1425-ish. But if you zoom in a bit more on the daily here, you'll notice that it's forming a bit of a symmetrical triangle, which means you can pop up either way, right? And when chart patterns get pinched, they have a pretty reactive upside or downside move. So just like people don't like to get pinched, chart patterns don't like to get pinched either. So there's a big move headed for silver and gold in the next few days or weeks. We shall see. But let's take a look at the other precious metals, or other metals. copper. We'll zoom all these out on longer term so we can see the longer term trend on all these. Try to speed this up, so pay attention. Copper, long term uptrend. Let's look at platinum. The long term, come on, zoom out. Still in an uptrend. Let's look at palladium. Long term, still in the uptrend. Oh, yeah, let's look at the bonds real quick. So bonds are making new highs, you know. When there's fear, people are piling on to the US Treasury bond, which I believe, and many believe, is forming its own bubble. And we shall see how long this new highs on bonds exist, because as bonds increase in price, their yields decrease in value. So people are willing to buy bonds with lower yields, which goes beyond logical thinking, but that's the way many people are hedging these days in the bond market. So we'll see how high these bonds can go before it goes in its inevitable downward spiral with most bubbles. Let's continue looking at the commodities. HO, heating oil. Let's look at the long-term trend. Still within its long-term bullish channel. Let's look at corn. Corn made a new high and blasted above its long-term bull channel. Soybean oil still in this upward bull channel. Oats in the bull channel still. Look at general soybean futures, the top of its bull channel, and of course crude oil. Crude oil always in this bull channel, reached its peak in 2008, crashed with the market, but it's continuing on. Still has a lot of room to head back up to its 113 top of its bull channel. So we shall see that. Let's look at the VIX. Whenever there's panic in the markets, you'll see the VIX hit a high of about 45 to 50. It's done that 1, 2, 3, 4, 5, 6 times. And did an extreme in 2008, 2009, right? When all the markets were crashing. So I like to draw this line at about the 30 level. If we do get that high, more likely we are in panic mode and expect it to reach its 35 to 45 level panic. If there is no quantitative teasing, we could reach those levels once again. Oh, one thing to know here in general markets, S&P. Zoom in on this. Actually, let's look at the longer term. We're already there. Switch this back out again. We already double topped, right? From the year in 99, 2000 to the peak of 2007. We double topped and crashed badly. And it looks like we're going to do a triple top. Quantitative easing happens again. We could potentially reach another top and spell M for murder. Let's look at the weekly. A bit of Fibonacci retracement here from top to bottom here. We had a good chance of going bullish if we pass the 61.8 level. And look kind of fearful here. And we stopped there. We had a chance, July 16-ish. But then again, we closed under. But this week, we're looking very bearish. if we close below this 50% level, we could continue a downward leg for the S&P, which will probably drag down Dow Jones and Nasdaq with it. So we'll see where this closes. If it closes above 50, there's still a chance, but underneath this 50 level, 1344, could be blood in the markets. So stack accordingly on the pullbacks. We could see $21 silver. We do. Be quick and nimble about it. If you could find it online, lock in your price. That's what you got to do. Hope you enjoyed this chart edition. Silver Trader FM. I'm out for now. Take care, guys.